4:15s. Come on, Spy. What do you want to do? Anyways, I wanted to take a look at this article here, guys. So again, we know the Fed came out with a decision yesterday, right? So the Fed gave the market exactly what it wanted. I just want to quickly scan through this article again, and see what it says, right? So again, the Fed raises interest rates by 50 basis points, right? Largest since 2000, since 2000, right? So again, that was the expectation. That's what the market priced in. That's why we had a nice run up yesterday. Why? Because this is exactly what the market expected. This is exactly what the market priced in, right? So that's why you saw the run up yesterday, all the hype, right? Because again, market gave us that, right? So the Fed on Wednesday raised short-term interest rates by 50 basis points as part of an effort to stamp down inflationary pressure weighing on Americans, right? The central bank suggested that it will further raise borrowing costs throughout this year as it attempts to undo its pandemic era easy money policy, right? So the policy setting Federal Open Market Committee also detailed plans on unwinding its nearly 9 trillion balance sheet, right? So again, they're cutting on some spending, losing the voice. The voice. The decision to raise by 50 basis points marked the most aggressive increase in a single meeting since May 2000, right? So over the last decade, the Fed has opted to raise interest rates only in increments of 25 points, right? So with the latest move on underscoring the severity of that inflation poses on at the moment, right? So and this is the quote here from the Fed yesterday, right? So the committee is highly attentive to inflation risk, right? So again, that's a quote from the Fed. The Fed is now targeting interest rates in a range of about 75 to a dollar, with some Fed officials advocating for raising the target to 2.5 by the end of the year, right? So again, the Fed rate hike. Blah 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 blah. There's a lot more to this article, right? So I want to skip through a few of these points and get to the conclusion, right? So the Fed statement noted that it is paying attention to a number of geopolitical risks, noting that COVID-related shutdowns in China are likely to exacerbate supply chain disruptions. The FOMC said it is continuing to monitor the economic implications of the invasion of Ukraine by Russia, which may add additional upward pressure on inflation. So again, we're having the market run yesterday because again the Fed gave us exactly what we wanted, but then also now we're looking at the rest, the bigger picture, and saying, oh, and that's exactly what the market is seeing today, right? So yeah, sure, we have the short term fix, right? But then we still have these issues, right? We still have Russia, Ukraine. We still have COVID and all these issues, and these are that's still a risk to inflation until we see progress with these numbers, right? So again, that's most likely what's happening here today, right? Sure, we had the short term fix, but we still have issues to fix. So until we get new numbers here, you might still see the market become a gamble market, right? Up and down, pump and dump, pump and dump, right? So hey, Mary, so there you go. So the decision was unanimously agreed to among the voting members of the committee, right? So according to the Fed, and then there's a whole bunch of stuff here about balance sheets, right? So balance sheet update. The Fed also officially unveiled a strategy to shrink its asset holdings after buying trillions of dollars in U.S. Treasuries and agency mortgage-backed securities to contain COVID's impact on the financial markets, right? So these guys are those, look at what the Fed is doing. The Fed is spending less. Uh, what does that kind of tell you for the market, right? These guys are like, yeah, you know what, you know what, uh, all the sheets. Stop balancing all the sheets, yeah, right. They're like, you know what, let's not spend as much anymore, right? So you guys can go do that, right? Again, the central bank announced Wednesday that beginning June the 1st, it will allow up to 4.75 billion a month. Okay, cool. Okay, cool. Okay, cool. La 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 la. The Fed hopes the process will allow it to reduce its 9 trillion in holdings, although the central bank has not clarified how small it will allow its balance sheet to shrink, right? So, la 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 la. La, la, la. Yeah, there you go. I just wanted to see if there was one more quote here. Yeah, I just wanted to see if there's one last quote here from Powell, right? So that's a really good read there. That kind of gives you an idea of what's happening, right? So yeah, we have the fix for now. We want to see if this fix works, but the issues are still there, right? So nothing's gone away yet. So there you go.